We are now live. Debashri, please go ahead.
Good afternoon. I am Debashri Chatterjee from Concept PR. On behalf of Federal Bank, we welcome you all to the virtual press conference for Q3 FY23 results. From the Federal Bank, we have MD and CEO Mr. Shyam Srinivasan, Executive Director Ashutosh Khajuria, Executive Director Ms. Shalini Warrior, CFO Mr. Venkatraman Venkateshwaran, CMO MVS Murthy, and Harsh Dugar sir. The conference will begin with a speech from the management, sharing the key highlights of Q3 results, following which the floor will be open for the Q&A session. We request all the participants to be on mute during the presentation. Thank you.
Good afternoon, everybody, and thank you for joining this call. This being the first meeting of calendar 23, let me begin by wishing everybody a great 23. You must have all had a chance to see our Q3 numbers. Certainly, we are pleased with the outcomes. Not necessarily that the profit is the highest ever, which it is, but the manner in which we have delivered Q3, broad-based across products, across segments, across lines of business has been very encouraging. We've seen healthy growth in balance sheet. We've seen continued improvement or continued progress on our credit standards and credit quality. Asset growth, like I mentioned, has been strong. Deposits, which was a challenge for some of the industry participants in the preceding quarters, we outstripped growth in this quarter. And as a consequence of it, NII being high, credit costs being well managed, our net profit growth sequentially and Y-on-Y has been very encouraging. Y-on-Y net profit grew 54% and we delivered 804 crores of net profit, and operating profit too grew very substantially, well over 39%. So on balance, Q3 FY23 is quite on track to our overall numbers that we had visualized to deliver for FY23. Those of you who have been following or engaged with the bank in around February of 2020, just before COVID broke out, we had given a 3-year roadmap and pointed to certain ratios, both from a balance sheet point of view and from a financial standpoint of view, that we were pursuing and which we wanted to deliver, both in the mix of business, the kind of revenue outcomes, the kind of return ratios. Despite COVID coming in and interrupting progress, I'm pleased that the bank has delivered even higher than what we had set out to deliver, and thereby sets the standard for what we look to for the next horizon over the next 2-3 years. So at this point in time, as you may have observed, all the numbers have ticked the right boxes. But it's not just the end outcome, it's the process and the manner in which the teams have gone about delivering it, be it the new businesses that we have launched and or the existing businesses getting strengthened. And I'm happy that we've seen progress consistently. As you may have observed, this year we began with the 600 crore in Q1, 700 crores in Q2, 800 crores in Q3. Certainly it's very addictive to believe that this momentum will be sequentially progressing, but we are not going to, sort of take our feet off the pedal. As you would have also observed, the progress is across lines and not in any one dimension. So those are some of the headlines. I don't want to belabor you with slide by slide. There's an investor deck out. The presentation press release is out. I think between me and the entire senior team that is gathered here, we'll be able to give you a lot of color and texture around the business progress and the momentum that is ahead. So allow me not to make a long presentation, but happy for us to answer questions, and between me and the senior team, we'll be able to help you get the details. So Debashri, back to you.
Thank you, sir. Now floor is open for the Q&A session. Would request participants to unmute themselves and announce their name before asking the questions.
Yeah, hi, this is Saloni Shukla from Economic Times. Can I take a question?
Please go ahead.
Hi, sir. Good afternoon. So just wanted to understand this quarter. You said you've delivered the highest, ever profits, and the numbers look good. But going forward, how are you seeing the growth momentum? Because I mean, we saw the June quarter of the current fiscal year. Uh, Banks are in a purple patch, but now going forward, there is some doubt whether this credit growth could be sustained from here on, given the doubts over economic growth and demand and all those things. So from here on, what can we expect?
No, I think, Saloni, when we began financial year 23, we had guided for credit growth in the high teens, and that is continuing to progress. I don't see that changing in Q4. At this juncture, it's good to take views of 1 or 2 quarters at the best, because there are many moving parts. I don't think India or an economy is operating independent of the global developments. But that said, as a bank, we have certain distinctive strengths and areas of focus where we see enough opportunity to grow and gain share, as we've been doing for many quarters now. Like I pointed out, our commitment for the full financial year around 17-18% credit growth is intact, and we will be able to deliver on that, and deposits to match that. As we sort of get into FY24, we'll have a more clearer vision of how things are playing out, but it's not going to dramatically come off. Our growth momentum is fairly robust. It's broad-based, like I pointed out. And most importantly, share gain for a bank like us is very possible, and we're determined to do that.
Sir, on deposits, we have seen, largely the banking system raise a lot of money from the markets, vis-a-vis using deposits to fund their credit. Going forward, do you see that pattern changing?
I think would vary bank to bank. We are a largely retail customer-led deposit origination machine. Even at this juncture, when our deposits grew sequentially 6%, Y on Y 15%, 90% of our deposits is retail customer. That said, there will be borrowing opportunities, and you'll keep trading off between, and actually you have to manage 3 parts of the stand. We'll have to make sure that credit growth is there and is the right type, and the deposits and or borrowings, which is more optimum to meet our credit demands, tenor of the deposits. So I think it's a blend of stuff, but for us, to suffice to say, as you would have observed, our deposit growth is largely client-led.
Okay, sir. Thank you.
Welcome.
Yeah, I'm Kishore from Norama. You've been optimistic about your bank, Federal Bank, but do you share the same optimism in the case of banking sector in general in the coming year? Could you share with us your outlook for the coming year for the banking sector, given the circumstances?
No, I think banking system in India is poised for good growth. Yeah, there will be shades of good growth. Some will do extremely well, some will do relatively less well. But I believe growth for the system is there and will continue to happen. Whether it grows at 14 or 17 or 18 could be the matter of debate, but India will grow and India's banking system will grow. And equally, for banking system to grow, India should grow at the reverse. So I think that relationship will continue. I am extremely optimistic, Kishore. I have been for many years and I'll continue to be.
Yeah, thank you.
Hi, sir. This is Siddhi from Reuters. Thanks for my question and congrats on the results. I just wanted to ask about your NIM trajectory. As deposit growth is also likely to match the pace of your credit growth, as you said, what would be the trajectory on NIMs? That's my first question. And second would be, would you be looking for fundraisers in this FY going forward?
I think NIM, Siddhi, if you've been tracking us, at the beginning of financial year 23, we had pointed out somewhere in the 325, 330, 335, that's the range. This quarter was a little, happily and thankfully at the higher end of that, much higher than that range. That, as you pointed out, will moderate to some extent as deposit pricing catches up. So we will hold on to our full year NIM guidance in the mid 330s, and that may be the baseline for the following year. On capital raise, we keep evaluating. Even now, we are much higher than the where we would like, where we our internal guidelines are. But if the momentum continues to be strong and we see opportunities, we think we can. But we will certainly not be in any immediate requirement. That said, if the timing is right and the opportunity is right, we will. But at this point in time, we don't have anything drawn up as a plan as yet.
Okay, thank you.
Hi, sir. This is Ashish from the Press Trust of India. Can I please take a question?
Yeah, go ahead, Ashish.
So last quarter, you had said that okay, there's a war for deposits in the system after you reported a 10% YOY deposit growth. This quarter, you seem to be much more sanguine about the entire deposit side aspect. So what makes you like sort of a bit more optimistic on that front? Because ultimately all the other factors out there remain the same. You're also guiding to hold NIMs at 3.30s in Q4 and it being a baseline for FY24 as well. So what's the entire sort of play like, sir, on the deposit side?
No, I think for us as a bank, we are encouraged by our deposit growth continuously. We have, like I said, a retail franchise, and therefore our ability to grow deposits has been quite consistent. The war for deposits will continue. I don't think I said that it will be any less. It will continue to be aggressive. Typically, Q4 is normally a strong credit growth quarter, so there will always be need for deposits. We must remember we are trying to grow deposits not at times when liquidity is a problem. India doesn't have a liquidity problem, right? So there's a pricing that you have to match, and if we price right, there is a deposit waiting to come. Our confidence, or a little more, is the fact that this quarter we grew sequentially 6%, and we could demonstrate that we are able to get the right kind of deposit profile, and the base is supportive of that. So that gives me the reassurance that as we keep, sort of improving our performance and our expansion of our network, if you may have observed, we've added already close to 60 new branches this financial year, and we may end up another 20 or so. So our network is continuously expanding. Our digital capabilities are getting richer. Our cross-sell capabilities are getting finer. So I think between expansion, deepening, and the retail client base, and the fact that India doesn't have a liquidity problem, it just has a reach and distribution opportunity, I remain confident that we will be able to grow.
Okay, and even without playing the pricing play really that way, sir?
There is certain degree of elasticity to price, and we are cognizant of that, and we are very much in the market for that.
Thank you, sir.
Thank you.
Hi, sir. This is Hamsini from the Hindu Business Line. Congratulations, it's been a good quarter. You've had about 20 bips hike in cost of deposits, but that hasn't sort of been a hindrance for you in terms of your NIM expansion. So I'd like to understand what are the products that played out favorably in terms of you to reprice upwards, and do you see that this sort of a window being available for the bank maybe running into FY24?
I think the credit expansion or yield expansion on the credit has been higher than the cost of deposit increase. So that gives you one spread. Second is the credit quality has been robust.
If you can help me understand the products that helped in the spread, sir. Is that possible?
It's a mix. I'm happy to share that. It's there in the deck also. It's a mix, Hamsini. It's not one product, right? We've seen both retail and corporate grow 19%, 20%. Within retail, we saw businesses that are newer for us, but growing at a record pace. Our credit card business cumulative grew about 80% Y on Y, right? So our personal loan business has started picking up, retail mortgages, and the repricing impact on the entire stock as interest rate increases, that has helped. And likewise, on the corporate side, you've seen pickup on the corporate credit growth has been material. Repricing opportunities have come, and the team has done a great job of doing that. Business banking has picked up, commercial banking has picked up, commercial vehicle has grown 63% Y-on-Y. Our MFI business has picked up. So I would say, if you look at our investor deck, we've sort of peeled for comfort all these numbers. I'm just reeling these numbers from there only. So these have all played out, and so a mix of business mix, growth, timing effect of deposit increase and credit increase, and most importantly, credit quality being I would say pristine. Credit cost is only 38 basis points, which means the offset to revenue is much lower. Yeah.
I know you never liked me asking you this question on retail slippages. When I look at retail slippages as a percentage of total, we are at about 45% this quarter. It's on a YOY basis and on a sequential basis, it's seen a bit of a jump. Which pockets of retail would you possibly be a little more cautious about going forward?
No, I think it's not pockets of retail. This reasonable part of the slippage in retail is because of the slippage from the restructured portfolio.
Okay.
So that's always the case, right? When you've had restructuring, and that's been the one thing that you wanted to help out, there will be some slippages that will come. So it's not particularly alarming.
Fair.
As a when it's 45%, it's also a denominator game, right? When nothing else is slipped. So it's never a good idea to look at it as a percentage. You have to look at it in absolute terms, because as a denominator is, happily it's shrunk, which is good, right? Because something else has not fallen.
Fair point, sir. Just one last question, if I can squeeze in. Your share of acquiring business from digital modes, and I'm assuming it also includes your third-party arrangements that you have, is at an all-time high. At the same time, you're talking about opening 60 new branches. If you can throw a little color on what sort of a blend you want to go ahead with in terms of branch banking and digital banking, and are you looking at reorienting or reshaping some of the branch banking units that you have right now?
No, I think first of all, they are not either or, it's an and game.
Okay.
It's not either digital or branch banking, it's both. Branches for, if you've been tracking us, which I think you have been, for about 4-5 years, we had gone slower on expansion. We had expanded in a burst in the first few years, then we held back for a few years. We wanted them to mature. And as they have matured and we are getting comfort that they are all delivering, we came to the next version, which is add more physical footprint, but keep it light, as in the footprint, the network of branches increases, the presence per branch or the density per branch or the size per branch comes down, but put more people on feet on street. So it's a combination of both. We add through our own digital capabilities and that of our partners for Fintech, we're adding a reasonable sum of new clients coming on board, maybe like 3 lakh customers a month, at least 2.5 lakh customers a month. So that's a sizable chunk add, but the core architecture of the bank also does about, roughly about 1 lakh customers a month. So combination adds about 3.5 lakh customers a month. And that will continue. And then we have a 1.3 crore customers to cross-sell and deepen.
Okay. Thank you, sir. Thanks so much for this.
Welcome.
Hello, sir.
Hi.
Hello.
Yeah, hi.
Can you hear me?
Yes, I can hear you.
I am Suja from Malayalam Manorama.
Yes, Suja.
Sir, Federal Bank is very well ahead of digital banking initiatives like your FEDI, etc. Do you have any special plan for this year, this new year? And do you have any plan to start digital banking units?
Two things. Digital banking units, absolutely yes. We already have one in which the regulators had asked us to do, which we have in Calcutta. In each of our states, we have 24/7 our digital studios. We have virtually in Ernakulam itself, I think 4 or 5, and that will keep expanding. So DBUs, as the name is now officially known, if you add up all that we have, probably more than 10 across the country, and that will keep expanding. We see that as an opportunity to serve 24/7 in every location. So that will continue. And new developments, you mentioned Fedi. Fedi is, in one of our meetings, we said Fedi has grown up. Now Fedi has, from being just one feature to multi-feature. Shalini is smiling. She is making sure that the Fedi is getting arms, legs, eyes, nose, everything to deliver virtually every service to a customer seamlessly. So you will see a lot of development. Some of you reported the robo whom we lent to came to collect the money from us, collect the loan amount from us. This year, the same robo will come to pay the money to us. This year, the same robo will answer many more questions. So there's a lot of development going on, and this is a continuous improvement, continuous innovation area.
Okay, sir. Thank you.
Welcome.
Hello.
Yes.
Sir, I wanted to understand. I'm Falaknath from Deccan Chronicle newspaper. I wanted to understand this corporate credit growth. Is it purely working capital loans, or is it come from new projects also? Can you give the breakup of the growth, corporate book, the growth in the corporate book?
It's mixed, Falaknath. Working capital increase is probably 60%, and term loan increase is about 40%. Harsh, am I right?
Yes, Shyam, broadly yes. And the term had a mix of OPEX related term loans also, and some for fresh CAPEX as well.
Thank you.
I can see two hands up.
Yes, Nupur here from Reuters. So just a couple of questions. First, just wanted to check that, on the FedFina IPO, last time you said that roadshows were going on and you'll take a call on the timing soon. Just wanted to understand if there's been any update. And also, sir, if there's any target for recovery that you can give for the next quarter.
On FedFina, Nupur, best answered by the management, but at this point in time, it's still work in progress. We haven't zeroed in on anything as yet. You would know in case something develops, but at this point in time, it's still evaluating options. The DRHP is valid for another 4-5 months, so we will evaluate that. On recovery upgrades, in a normal quarter, we do between 200 to 250 crores. Q3 was exceptional with 287 crores. So we will, set ourselves in the goal in that range, 250 odd crores.
Thanks, sir.
Welcome.
Hello, sir. This is Pushpita from Z Business English Digital Team. Am I audible? So recently, the MOS mentioned that in the upcoming months, the government is planning to have at least 30,000 vacancies in the banking sector. If you could please tell a little more about the attrition rate for the bank, particularly for this quarter. What are you planning in the upcoming quarters? What could be the job opportunities in the bank?
Pushpita, I think we are blessed with a very good workforce that likes being here. We are a great place to work. Bank 3 years on a trot. Mercifully and thankfully, our attrition rates are sub 3%. So, and that we will seek to keep. That said, our new branch expansion, our corporate and retail and various functional requirements of relationship managers, analysts, credit analysts, business analysts, technology, the demand for people is increasing quite materially. This financial year, we'll probably recruit well over 1,000 people in financial 23. And I see maybe 24 repeating itself because our expansion on network is about 7,500 branches. And that itself requires people. So we think we will add around 1,000 people a year or maybe more. We'll see how it goes.
Okay, sir. Thank you so much.
Ashish here.
Yeah, please go ahead. I don't know. I saw a hand called Aarti Singh, but go ahead, please, whoever.
Yeah, sure.
Yeah.
Okay, shall I start? Okay. Hi, sir. This is Aarti from Mint. Sir, I heard you saying that there are 3 lakh customers that you are adding a month through fintech partnerships, if I'm not wrong. and 1 lakh through your own channel. So, and you said that you will later on, you'll maybe, you do this cross-selling opportunity that you see of those customers. So if you can help me understand if you have already started cross-selling with those customers, and on the credit side, how is your partnership with the fintech going? And how many partnerships do you have on the fintech side, on the credit side, the fintech partnerships? And overall fintech strategy that you have right now after all this regulatory, circulars and all. I mean, are there some challenges that you're noticing right now?
No, I think we've consistently for 2 years or so, partnerships with the prominent 5-6 of them have only got stronger. Yeah, the regulatory norms changing have required both the bank and the partner to rearrange or readjust and ensure that we are completely compliant, which we are. And we've been focusing around both deepening and widening. Widening is the first part. Deepening takes time because the certain parameters have to kick in for us to make the second and the third and the fourth product offer. With one of our fintech neo-banking partners, we've just started our credit card cross-sell relationship. With the credit card and gold loan NBF partners whom we've been partnering for a fair bit of time, we've seen opportunities now to work through new other products with them. So the outcomes that you're seeing in our results are visible, right? That we're growing our revenues, we are growing our business momentum is influenced by all these customers coming in and adding value in some part or the other. While I'm not going to sort of zero in and say this and this and this and this, the headline is all of them are contributing to our progress, and where it doesn't make sense or where there's compliance issues, we'll back out.
On the credit side, I'll just add one more question. On the credit side, you said that you have one big partnership that has become quite stronger for you. So could you please tell me on the overall credit side, what kind of, the retail credit or maybe credit via fintech partnership contributes to that overall credit growth?
Yeah, sure. Overall, see, our overall credit book is 175,000 crores, right? Our fintech partnership-led credit expansion at this point in time is not even in the thousands. So as a share of our larger denominator, it is very small. But from where we have begun, it's moving well. Credit card partnership with FPL is doing very well. Fintech partnership with Rupeek is doing extremely well on the gold loan. At the top of my head, these are the two most prominent credit relationships using partners. There are many more, as they are all in the early stages. Some of them are just getting started, and some of them will grow based on the cross-sell opportunity. But the two prominent ones are Rupeek and FPL. Shalini, Harsh, you may want to add.
Yeah,
I think
and
covered, Aarti. Just to add, I think. Hi,
yeah,
Aarti.
Shalini, just one add-on question I wanted to have. Nice to see you after, in this new year. So Shalini, also wanted to add one more question on the FPL side. So I know that it has been a good partnership for Federal Bank, for last 1 year, if I'm not wrong, or just how many cards are you offering through partnership through FPL, like a month or so, if you have any numbers to share?
Yeah, so I think, thanks, Aarti, for that. First, I think on the lending side, as Shyam said, the significant one is what we have with One Card and what we have with Rupeek on the gold loans. But we've also started work, and you'll see that in the investor deck with Paisa Bazaar, etc., where we've started to sell consumer loans, personal loans through those platforms. We've also expanded that from a cross-sell perspective to indicate that, for example, Epify customers are now being cross-sold a credit card as well as a personal loan, and that deepens the relationship with them. So the broader point is that we may start with a savings account, we could cross-sell a credit card to them, we could cross-sell a personal loan to them and therefore deepen the relationship. We could start with a credit card, cross-sell a personal loan to them, etc. So it's a wider relationship that we have with these partners. Similarly on Rupeek, we have discussions with them while we're doing gold loans. There are other products that we believe that customer base can be cross-sold to. So cross-sell is an essential ingredient on the fintech strategy. To your specific question on FPL, I can just say that the numbers are well in excess of what our initial projections were. The year is about the partnership is about 15 months old now and is tracking well, Aarti.
Sure, makes sense. Thanks so much.
Ashish, would you like to go next?
Yeah, well, sir, you mentioned about the targets set in FY20, February 20 being achieved. So any newer medium-term plans, targets which you have set for the bank?
You will hear from us in a month from now.
Okay, sir. Okay, sir. Thank you.
Momentum will continue. We have a session coming up towards the end of February, very similar to the session we had 3 Februaries ago. So hopefully after the session, no COVID this time, and we will be happy to make sure that we once again out-deliver that.
Okay, sir. Thank you so much.
Thanks, Ashish. Anything else? Subrat Panda has got a question.
Hi, sir. Subrata from Business Standard here.
Yes,
so your loan book on corporate advances have grown by 19%. I just wanted to understand if you want to grow this corporate book at the same pace going forward, and also as the pricing was settled in the corporate portfolio.
Pricing
war that was going on among banks.
So I think pricing war in any category that is attractive will continue in any business. Forget banking, right? Good customers will always command a premium. And that's just the normal thing. So I would not try to believe that these will go away. Yes, some kind of readjustments happen depending on a range of things. The prominent players in the market, if they are either slowing down and or churning books, there will be one kind of behavior. So I think pricing by itself going away or staying, I can't comment. We will have to pick and choose. I mean, where we want to compete and fight. And we are quite mindful about that. But a bank like us growing and ensuring we get our share gains is not going to diminish. That aspiration will continue. Corporate growing at 18-20%. If there are opportunities, we will. I mean, the same bank grew 25. We cooled off to 7-8%. We came back to the mid-13s and then we pushed it to 18. We don't want to be reckless. We want to be thoughtful about where we grow. And I do believe there's enough opportunity for us to grow for the commitments that we've made.
Sure. Thank you so much, sir.
Anybody else? Okay. Devashri?
Hi. Anyone has any question? Please let us know, or probably would like to. Then we'll close it, sir. I guess.
I didn't see our usual friends, Joel, Rebello, and other gang and all. I didn't see this time. I saw some different names. Maybe Saloni came in from ET. I don't know.
Yes. Saloni came. Saloni joined us today. Yes, sir. So, on behalf of the Federal Bank, I would like all of you would like to thank all of you for joining the virtual conference today. Look forward to see you next quarter. Thank you. Have a nice day.
Thanks, everybody. Thank you.
Thank you. Bye, everybody. See you. Thank you.